Let's talk markets and rate hikes with Sethi. He's a managing partner and portfolio manager for DCLA and a CNBC contributor. What was yesterday, Sethi? I know that you like stocks on any given day based on the individual fundamentals, but what do you make of what happened yesterday? Home Depot?
I think Home Depot was definitely part of it. I think investors are saying, hey, what's going on? Where is the consumer spending their money? And are they continuing to spend the money in the economy? And what we're seeing is pockets of strength and pockets of weakness. The strength is coming in the staples area. It's coming in the travel and leisure area. It's coming in the services area. What we're really seeing is in the goods area, especially because consumers spent so much money during the pandemic in their homes and upgrading, that you're going to see less demand there. So I do think it's going to be an economy where investors have to be very selective. You've got rising interest rates, you've got 18 times multiples, and you've got companies that sometimes are trading not on cash flow. So being careful in this environment, but I also think there's opportunities here, Joe. There's so much negativity. You guys were just talking about all the things that could happen, and we've had that. I mean, we've had 3 corrections of 20% in the last 4 years. So we're getting kind of this volatility. And I think that's where people like us get a little bit excited that we get some opportunities in some high-quality companies. Do
you have an S&P estimate for this year, Sethi? Or at least what do you think is that the S&P earns? What do you think S&P companies earn in 2023?
I think when you break it down, you're going to see low 200s for the estimate. And if you put a multiple of 16 on that, you're looking at high 3,000s, somewhere in there. But the market's going to start looking forward to, Joe. It's going to start saying, when do we bottom out on our earnings? And there's so much negativity with all these strategists out there. So I do think there's a much more opportunity if you are a long-term investor. And again, have capital in the market that you're going to invest for 3 to 5 years, not just for the next 6 months. And I do think the opportunities are there. Too much negativity at this point because everybody can just point to everything that could go wrong, and we've had that case for the last couple of years.
So it's just a cyclical bear, and you think we're still, stocks go up over time. We don't need to, we haven't paid it forward so much that it takes us 5 years to work it off. You don't know?
Absolutely, I agree with you on that one. What I would say is, look, a lot of companies did well during the pandemic. We had a lot of free money. We all know that. But now it's coming back to essentials. The playbook is different from the last 10 years. It's much more of an early 2000s playbook. What companies are going to do well in a higher interest rate for a longer period? And the consumer is still stronger, too. I mean, wages are up. So you have to look to see where the opportunity is going to be, not just by the overall market. But I do think it doesn't mean we've paid it forward. I think there's opportunities there in healthcare, staples, select tech, select industrials, financials. There are going to be bottoms-up picking here for companies that will do well in an environment that was very different for the last 5 to 10 years.
Do you own Walmart, Sethi, or would you buy it? What do you think of that report?
We don't own Walmart. I think it's a very well-run company. It's more just valuation for us. But we own a lot of other things in staples like Diageo, Nestle, Coke, Constellation Brands. I think all those things sell into Walmart. And I think what Walmart's saying is the consumer is still buying, and they're paying a premium for higher margin products. They're paying a premium for companies that they want to own. So you've got a combination there of some positive and where the consumer is going to be spending. So I do like the Walmart story, just a little too expensive for our blood at this point.